Something's brewing in the XRP market that hasn't happened in months, and if you're holding or thinking about buying, you need to see this pattern. Let's break it down. All right, lovely viewers, here's where we are right now. XRP is sitting at $1.3847, and, well, it's had better days. We're looking at a minus 2.41% drop in the last 24 hours. You know what I've noticed? The price bounced between $1.4291 at the high and $1.3715 at the low, with about 90 million XRP changing hands. Now, before you panic, this is part of a bigger story that's actually quite interesting when you dig into the data. Here's why these numbers matter, sweethearts. The RSI is at 46.21, which means we're in that neutral zone, but leaning towards selling pressure. The MACD is sitting at 0.0089, below its signal line at 0.0112. That's giving us a bearish signal right now. But here's the thing. XRP is trading below that middle Bollinger Band at $1.4137, which tells me we're in short-term weakness territory. The 200-day average shows XRP is about 18.74% below its long-term trend. That's actually a pretty significant discount. Now this is where it gets really interesting. Iran just announced they're collecting $10 billion in transit fees through Bitcoin for the Hormuz Strait. This is huge because it shows how crypto is becoming a geopolitical tool to bypass sanctions. Meanwhile, Bitcoin dropped below $77,000 for 4 straight days, triggering $657 million in liquidations across the crypto market. Since XRP has about a 0.5 correlation with Bitcoin, when Bitcoin sneezes, XRP catches a cold. On the regulatory front, well, it's been pretty quiet actually. But here's what's not quiet. XRP ETFs are bleeding money. We're seeing $38.2 million in outflows across all XRP ETF products. The big ones like XRPT lost $6.3 million. XXRP lost $12.5 million. That's institutions pulling their money out. But honestly, this looks more like short-term jitters than any real regulatory concerns. The mood right now is pretty grim, not gonna lie. The Fear and Greed Index hit 28, which is approaching extreme fear territory. XRP search trends are down to just 14, and the FOMO spread is only 2.0. People just aren't excited about crypto right now. But you know what I've learned over the years? Sometimes the best opportunities come when everyone else is scared. The big players are doing something interesting though. We had 7,232 transactions, with over 1 trillion XRP moving around. And get this. Nakish's 671 whale accounts were responsible for basically all of that volume. Even more fascinating, wallets holding over 10,000 XRP just hit all-time highs. So while the price is dropping, the smart money is actually accumulating. Makes you think, doesn't it? In plain English, we're in what's called an Elliott Wave C-correction phase. Think of it like the final washout before things turn around. The Wyckoff analysis shows we might be in an early markup phase. But honestly, the signals are mixed right now. What this typically means is we're probably going to see more pain before the gain kicks in. So what does the AI think? Well, this is where it gets exciting. The short-term prediction is a bit concerning. It's calling for $1.2506 in the next day or so, which is about a 9.7% drop with 77% confidence. But wait, here's the plot twist. The 7-day prediction jumps to $1.6548. That's a 19.5% gain with 65% probability. And the 30-day target? $1.8404. That's nearly 33% upside from where we are now. But here's what could go wrong. And I always want to be honest with you. First, those technical indicators are still looking weak, and we could see more selling pressure. Second, with $38 million flowing out of ETFs, institutions might keep pulling back. And, that Fear and Greed Index at 28? It could easily drop to extreme fear levels. which usually means more panic selling. Here's my take, and remember, I'm just looking at AI data, not giving financial advice. I'm saying wait and gradually accumulate. Here's the plan. Primary entry at $1.25 when that AI prediction hits. If it drops more, secondary entry at $1.20. Stop loss at $1.10 if things go really wrong. First target, $1.65. Second target, that beautiful $1.84 the AI is calling for. The risk reward here is actually pretty attractive if you can handle some short-term pain. That's it for today, lovelies. The data suggests we're in for a wild ride. Down first, then potentially way up. If this analysis helped you see the bigger picture, smash that like button and subscribe for more AI-driven insights. I'll be back tomorrow with fresh data. Take care.